Hello all, Drew Williams, Rutherford's Real Estate. Real Commercial hosted a webinar recently across the whole commercial sector. Some of the sections on industrial were of particular interest to our segment, and I just wanted to share those with you. I'll just share my screen. So Anne Flattery is the Chief Economist at Real Commercial. She gives some excellent insights. This first slide shows that our economy is growing, but on a per capita basis, we've been in recession for about 2 years. Um, and we're feeling that in the industrial market. The market's tight. Many businesses are finding it tough right now. This next slide just talks to interest rates. So, what we find is that both psychologically and practically, reducing interest rates prompts activity and that fuels business. And then that gives comfort. It also gives comfort to purchasers that we've hit the top of the interest rates and we're now coming down the other side. And it gives them confidence to invest in the knowledge that interest rates are unlikely to go up. So we're likely to see that play out a little bit more over the next probably 6 months, 6 to 12 months. This next slide was quite interesting. We hear all the time about the record number of insolvencies. What we don't hear about is the record number of new businesses starting up. So the net result in financial year 24 was an increase of 73,000 businesses in Australia. So we're always hearing the negative about the insolvencies, but there's a record number of businesses starting up that's actually outweighing that. This slide shows again that industrial is outperforming all the other sectors in commercial. The volume of sales in industrial is exceeding all the other sectors. This has been the case for the last few years. This was an interesting slide. I haven't seen anyone report on this before. Um, So I think it's probably a bit of a trend in that most of the transactions were below 5 million. So a lot of the sale transactions are happening below 5 million. Quite interesting. And I think that really we're experiencing that. And I think that's partly because the institutions and the um, also the syndicates are not as active, which plays directly into this next one where private buyers are dominating the market. And we're certainly seeing that. We're seeing some savvy private buyers really active right now. Just probably in recent weeks, we've seen a big uptick in this. And I think what their strategy is, knowing that we've reached the peak in interest rates and we're starting to see them come down. I think they're expecting the market to pick up and therefore the opportunities to drop off. So there's probably a window right now of opportunity for purchasers to buy potentially at the bottom of the market or near the bottom of the market. Um, so this reports on vacancy rates. You can see Melbourne is the highest of all the capital cities currently. It's still not very high by historical standards, but it is having an impact on the larger size categories. So over 10,000 square meters of building size, we're seeing incentives blow out, probably particularly in the western part of Melbourne where there's a lot above 10,000 square meters come onto the market at the same time. We're seeing sort of 20 to 30% incentives. This last slide of Real Commercial is related to online sales, and all the expectations are that online sales will continue to grow, and that fuels the expansion of industrial property, along with all the other forces, but this in particular is having an impact. And interestingly, it's largely food sales that are showing the fastest growth in this online sales sector. So, in summary, what we're seeing is really confirming what Real Commercial are reporting that time on market has stretched out And marketing now is more important than ever. You really can't sell a secret in this market. We continue to see the most activity and the strongest results coming from the owner-occupier sector. Vacant, this is an interesting point. So vacant older buildings, 10 plus years old, even 20 plus years old, are transacting faster than new buildings. And that's largely because new buildings are at a different rate based on the value that the developers have paid for the land. So there's a bit of a gap there. And the gap between the tenant and buyer and property owners' expectations is still a challenge. So tenants are here, landlords are here, and buyers are here, vendors are here. So that gap, which has always been there, but is a genuine challenge right at the moment. And the interest rate decreases are likely to have a positive flow-on effect. We expect to see an increase in activity in business, and then the industrial property market will pick up with that. So there's a lot of different factors playing into industrial, but overall, it's again proved to be very resilient, and there is opportunities there that will probably be, I think, just for a short window. I think there's some real opportunities in the market at the current time. Hope that gives a bit of an update. Thank you.